Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarley. Great to have your company. Let's have a look at where the local market tracked as President Trump once again dominated market headlines, announcing, of course, overnight that there would be no change or extensions granted to his August reciprocal tariff start date, and also announcing this 50% tariff on imported copper and saying long-threatened levies on semiconductors and pharmaceuticals are coming soon. So we did see the market dip on the open, as you can see. A little bit of an attempt at a rally mid-session, and of course the fact that some of these big mining heavyweights like BHP and Rio did well helped us out, but we have finished lower by around 1/3 there on the SIBO 200. It really was this copper curveball, and we'll get into that a little later on, and particularly the momentum that we saw in some of those copper players, the smaller ones like Sandfire, being hit today. Also, a day after the RBA shocked us with the hold decision, the RBNZ also held rates. That was not so much a surprise though. Kiwi Central Bank holding rates steady at 3.25%, but they did indicate that they will loosen monetary policy further if needed. Now, unlike the RBA, which is only cut in February and May, this was the first time the RBNZ has actually held rates since it started its cutting cycle in August 2024. And then we're looking at China deflation deepening, in fact, for a 33rd month. PPI falling the most since 2023, down 3.6% on an annual basis. So again, a lot of concerns about the strength and health of the Chinese economy. Let's have a look at those copper stocks. I mentioned that we did see some upside initially in BHP and Rio, but they've finished lower. Sandfire Resources down 3.4%, off some of the lows of its day. Capstone Copper, it's been an MPC markets day, but I spoke to Jonathan Takadina on the trade, and that's one on his radar along with Mac Copper. Looking at the big miners more broadly, and particularly some of these iron ore players, Fortescue South32 under pressure, MinRes, which a lot of people have as a watch for full year 26, expecting a comeback after a disastrous full year 25, up 1.3%. And of course, we're watching very closely this proposed levy on pharmaceutical stocks or companies. CSL down 1.3%, Ansell down by about 0.7%. And the interest rate sensitive stocks coming under pressure today. The RBA, of course, surprising us. National Storage, they're down 1.3%. Well, Qantas revealed 5.7 million customers were affected by last week's data breach, but shares did rise because they said only 1 million had their phone number, birth date and home address accessed. So it looked like a lot of the data was not as perhaps personal as maybe that people had thought. Qantas shares up 0.8% to $10.86. Lifestyle Communities, they're down by 37%, flagging subdued quarterly sales and confirming its intent to appeal a Victorian tribunal ruling on unfair exit fees. GQG Partners also in focus, continuing to its position to just defend its portfolio over the June quarter. Telix Pharmaceuticals had a great session, rising on a US code approval for an imaging agent, and Orica at a 5-year high on an election of Brambles director as chair-elect. Elsewhere, Arizona Lithium up by about 8%, raising $5 million. And then Intellicare, which is of course a penny stock, well, it's at a November high, securing $1 million in funding. Up 100%. Because it was up by probably 0.0 something cents. Anyway.
Yep, it's good if you've got them, I suppose.
All right, sorry, we'll move on. Mark Gardner from MPC Markets is back. Double shift today. Need to get you an access pass. Your thoughts on the market action?
Yeah, obviously a bit of an interesting day today. Obviously that copper announcement, very positive for COMEX copper, which is the US copper, which is in pounds. Not so good for global copper because there'll obviously be a bit of a glut. And US is not renowned for its copper production, but for those who have got, Capstone's got an operation, it's in the US, which is about 31%, which is US based in the mine. I'm pretty surprised that Rio is down actually, because BHP has no US mines.
Yeah.
Rio
was up initially.
Yeah, Rio was up, but I mean, obviously still a very big iron ore play, so the water's of money, but Rio's got the second biggest, 180,000 metric tonnes of copper, second biggest mine in the US. So they are going to at least benefit partially from this. So, and I think it's such deep value at the moment. Forward PE, 7 or 8 or something like that. Really high dividend yield. Obviously, concerns over China, and it still is an iron ore play. But I think those it could only benefit that stock. I'm surprised that Rio wasn't up slightly today. I would expect. I think copper's busted through. Back to $5.80 a pound, I think, the last time I checked, just before we came on air.
Yeah.
Got to $5.90 last night, but I would fully expect that to continue higher tonight with momentum. That was a pretty vicious spike to the upside last night. But overall, I think copper, that thematic still plays. I think we need it for rewiring, the energy transition, for data centres, for a whole bunch of things. And because prices have been so low for so long, it takes 12 years to open a copper mine. There's going to be supply gaps moving forward, and I would say there will be a response to the likes of Chile and Peru, which produce over half the world's copper. They're starting to get very nationalistic and boot out, some of the foreign miners, and Trump's really given them permission to be non-global players anymore. So you might see some protectionist activity from those guys as well, and that's going to really affect things moving forward.
I want to get your thoughts as well on what we saw in China. So factory gate deflation, the worst in 2 years, really starting to show, I guess, some of the impacts of the trade war too. Yeah,
and I think you'll probably start to see some of the April uncertainty filter through into the numbers. I was really surprised at the strength in that payrolls numbers in the US, but apparently a lot of the government DOGE job cuts have shifted to states, and so it's still only government hiring. It's not private sector. But I think the big numbers for China will be industrial production and things early next week. They've been relatively quiet. There is stimulus going on. They did make that pledge that they will do whatever it takes to get to 5% GDP growth plus, and I would certainly back them to do that. But Trump throwing just things in the air constantly, it makes it very hard for them to target stimulus when they don't know what sectors are going to be affected overall.
Yeah.
So, but yeah, I do quite like China tech at the moment. I think no matter how this pans out, I think globalization will shrink essentially, and I think the Chinese are really keen to pioneer on their own in the AI space, and it's a matter of national security.
Yeah.
So I would expect they.
It's like we've always forgotten about DeepSeek, isn't it?
Well, yeah, exactly. But they're looking at deploying 115,000 NVIDIA chipsets in a data center in the desert somewhere, which they announced yesterday. So, those NVIDIA chips are certainly getting over there, that's for sure.
Indeed. All right, so now you touched on the non-farm payrolls, which surprised to the upside. In terms of the overall US economy, we get the FOMC minutes tonight. Any surprises there?
It depends. If you're like the journalist yesterday at the RBA press conference, if you listen to the central bank speakers, you won't be surprised. If you listen to the economists and the media pundits, you probably will be surprised. So the central
you're
banks.
not having a go at this journalist.
No. The second question was by far the best question yesterday at the press conference. Some of the questions towards the end I thought were borderline ridiculous. But the bottom line is that that's the mistake the market's made. They've listened to themselves and what they want, because if you go back and have a look at it, Michelle Bullock's 100% right and Powell is 100% right. But he said higher for longer forever, and everyone just keeps going rate cuts. And Michelle Bullock said they were going to, they're still in an easing cycle. They are going to come. It's just a matter of the timing. But I think it was very heavy-handed from one of the journalists saying, should the Australian public feel betrayed? Because it doesn't mean that rate cuts aren't coming. What's 5 weeks difference? And Powell's already said they would have cut in July had there been no tariff uncertainty. So the central bankers are telling people where it's going. You just got to stop listening to the talking heads, I believe.
It's those journalists, isn't it, Mark? What are we going to do with them?
Well, it's probably more the economists, I think, and you've got to look at where the economists are from. I covered this a couple of weeks ago. Probably don't listen to a bank which lower rates is better for mortgages, or a growth fund where lower rates is better for growth stocks and things like that. Listen to the central bank and you shouldn't go too far wrong.
All right, Mark, always a pleasure. Thank you for doing a double shift for us today.
No worries.
Mark Gardner from MPC Markets. And of course, speaking of his double shift, he was on the call as well. The stock of the day was Sandfire Resources. Mark Gardner from MPC Markets was joined by Andrew Weiland from DP Wealth Advisory.
We don't buy it not because we dislike it. It's more so, again, given, our sort of more ETF bias, I'd probably be looking at something like Wire if I were to be looking at copper companies. But so basically it's an ETF that looks at global copper companies. But and certainly there's no discounting the fact that copper is definitely going to be needed from that energy transition space. But as we were just talking about before as well, is that energy transition going to be delayed given, again, that change in US government policy? So lots of uncertainty there.
I would say Sandfire's a buy, but today I'd probably Rio, based on that tariff announcement, would be the better buy. Sandfire's really turned things around. It's a pure play, and they've been an earnings season. If they deliver again, I think this will be very much forgotten. As I said at the start of the show, it felt to me like Trump made up that number on the spot this morning, and it's very likely that it will be rescinded at some stage. So I think you'll see a bounce back.
Well, no bounce back on the market today, which is down by about 0.6%, crossing below its 20-day moving average. Let's have a look at the leaders, though. Telix Pharmaceuticals, they're getting that green light from the US, which saw its shares up by more than 6%. Liontown also having a very good day, up by around 6%. Clarity seems to be either on the up or down one every single day. Helio Group there also. Now, Sean Hickman has a really good piece on Helio Group in our afternoon newsletter, so I'm sure you are a subscriber, but watch out for that. IDP Education up 3.6% today. To the downside, Lifestyle Communities, we touched on the reasons why they're down 37%, and some weakness too in a lot of the uranium stocks today. And Evolution Mining down 6.4%. Remember, it has copper exposure too. In terms of the small caps, Botanix Pharma up 25%. A lot of the lithium players getting some love, along with Liontown there. You can see Delta up 20%. And to the downside, there a little bit of weakness again in those uranium players, and Sunrise down 13%. So tonight, as Mark mentioned, we get the FOMC meeting minutes, as he rightly put it. Depends on whether you've been listening to what Jerome Powell has been saying, and if you have, you shouldn't be surprised by those minutes. Also, the US federal budget balance for June, with a $40 billion deficit expected. Tomorrow, the turnover indicator for May, while the CBA household spending indicator for June is also released. And among those releasing quarterly reports is net wealth. So a final look at where the market is tracking today. Amidst the tariff trepidation, again, down 1/3% on the CBO 200. The ASX 200 has closed lower by more than that, 52.6%, 8,538, crossing below its 20-day moving average. Weakness in REITs, materials, industrials, healthcare, IT, and really just some support in energy and utility stocks today. Anyway, tomorrow, a new day with no mistakes in it, as they say in Anne of Green Gables. We'll join you from 9:45 a.m. Eastern tomorrow.